listen only mode. So I'm sharing my screen. I hope you guys can see that. Why she want to speak anything? So I hope you guys are here. Uh, Login, practice platform login done. I'm waiting for catalog to open. Yeah,
क्योंकि
catalog.
ईयरफोन्स
होती फ्री पे आती हो रहा
हाँ हाँ उगाड़ा वाला
I don't want you guys to hear the secrets of our voice. That's why I'm turning him mute. Okay, so I have one perspective and I'm open for the discussion. So my perspective is we should start or attempt a paper which is not available in your exam kit. So I can tell you till June 23, it will be available in your exam kit. But September, December 23 and June 24, this will not be available in your exam kit. So we should start any of these two. And very honestly, my personal opinion is we should do the latest paper so that, you know, you have an idea what sort of papers, what sort of exams, or what is the trend of the latest past paper. So that's why I'm of the view that we should start the June 24 exam. Suggestions, feedbacks are always welcome. No worries. So you should thank to me. Otherwise, people would have heard all of your conversation. So June 24, next, next. So it's like final go ahead. So should I click here? Should we start the question? So I hope all of you guys are here. And the second important thing is do notice, do observe how am I picking up the data? How am I linking the data? How am I interpreting the data? So these are the few most important things seen with respect to this. Okay, so let's start the question. And please do have a two-way conversation, communication, rather than only I'm solving the question at my own. Okay, that's the humble request. You should assume that today's date is 1st Feb 24. You are an ACCA student working in the firm of accountant. Your manager has asked you to carry out some work in relation to both large limited and large limited managing director. Rosati. In addition to some ethical considerations which has been raised by your manager, advice is required in respect of the sale of fully owned subsidiaries, the sale by a company of building and an intangible asset. Okay. The sale of an intangible asset. Fine. The group registration for purpose of VAT, the VAT implications of sale of building, the pricing strategy between the group of companies. Okay. The pricing strategy between group of companies, that's interesting. Gift of shares to a trust and to a trust and to an individual. Gift of shares to a trust and to an individual. So anything which came into your mind post looking into this in particular. So I can tell what is in my mind once I hear this heading in particular. So what is in my mind in particular is basically the concept of the trust and taxes. The first thing which came into my mind. Then the following exhibit available on the left-hand side of the screen provide information relevant to the question. Lark Limited Group memorandum for your manager, tax reduction strategies, email from Rosati, a gift of shares in Lark Limited, email from Rosati, work to be carried out, again, email from your manager. So, yeah. Anything in particular, any one of you want to discuss before I work to be carried out, email from your manager? This information should be used, answer requirement, choose in response part. Fair enough. Okay, so yes, sorry. Yes, Avai, so do you want to speak anything? Please, please, please. Avai, you raise your hand.
Hello, sir.
Yes, yes,
Is my voice hearable now?
yes, you are loud and all of your
Okay,
voices are audible, whether you want to speak or not.
okay, sir. Sir,
Yes.
in the question, we are required to write the prepared by or from. So how do we know we are tax senior or tax advisor or tax junior?
So if I look into the first line, you are you are an ACCA student, work for a firm of your accountant. Now, in such type of situation, that's a good point. Your manager has asked you to carry out some work. So what is your designation? Probably this is what you are asking. And I agree with you. It is not very clearly mentioned. What is my designation over here? So I can put my designation as, for example, senior officer, assistant manager. And at times I say in such type of situation, whatever designation I like, I can choose that. So question is open with respect to this particular point.
So sir, if we write the tax advisor, that will be the not to be the particular or that will be the general matlab.
The tax advisor, we can write tax advisor. Why are you saying it to be general?
सर
If
जैसे
nothing
अगर हम
mentioned, then
टैक्स जूनियर वगैरह लिखते हैं तो दैट्स मतलब कि वो एक उसी को वो करता है कि टैक्स जूनियर है, और टैक्स एडवाइजर मतलब जूनियर भी हो सकता है, सीनियर भी हो सकता है, कुछ भी हो सकता है ना वो तो.
I agree. You have a very valid point. But again, like I said, you can be anyone, but you are less than the manager. So you
Okay.
can write yourself as tax advisor. But here I would like to write, for example, trainee accountant that mostly suits to the designation over here because you are an ACCA student working for a firm of accountant. So you would be by default ACCA student who is
Junior
working
level.
for, yes,
Okay, sir.
that is the firm. So you
Okay.
cannot be at a senior level considering this particular question.
Okay, sir.
Most welcome. And no question? Okay. So sorry, I missed to read the comments. Manager is overhead. What definitely are senior or manager? So that's a good point. What difference does it make? So very honestly, not as such difference, but considering the professional marks, yes, it matters. You should not write yourself larger than or bigger than the designation allotted to you in the question. So in some of the organizations, people are very particular about these kind of things. Okay, so discussion done. This memorandum records discussions with Rosati, the managing director of Lark Limited. Fine. The Lark Limited group, Lark Limited, 100% shares by, okay, Lark Limited owns 100% shares in STV Limited, which is tax resident in UK, acquired on 1st May 2018. 60% in 10 Limited, tax resident in UK, acquired on 1st July 2015. URB company, tax resident in Limero, acquired 1st July 2015. WAR Limited, tax resident in UK, acquired 1st July 2015. So I hope you guys can identify or look for the differences between these four subsidiaries. URB company trades URB company trades in country of Limero and is resident for tax purposes. There is no double tax treaty between Limero and UK. All of the other four companies are tax resident in UK and pay corporation tax at the main rate. So all other companies are tax resident in UK and pay tax at main rate. Fine. STV Limited, background and information. Lark Limited acquired full of the ordinary share capital of STV Limited on 1st May 2018 for 550,000. STV Limited trades from the strict building, which it purchased from an unconnected person on 1st October 19 for 430,000. The strict building is not eligible for structure and building allowances. I hope you guys understand its implication. Means this building is old building and SB is not available on this building. On 1st April 2022, STV Limited purchased a registered trademark, the S trademark, for 30,000. You should be aware that on 1st May 23, VAR Limited purchased a registered trademark, the V trademark, for 40,000. Both trademarks were acquired from unconnected persons for use within the respective company's trade. They are being written off over a 20-year period in the company's financial statement. The amortization charged in respect of S trade for the 2 years ending 31st March 24 will be 3,000. STV Limited is a profitable company. It has no trading losses or capital losses brought forward as at 1st April 2023. Sale of STV Limited. A sale of either STV A sale of either STV Limited share capital, option 1, or company assets, option 2, will take place on uh, 31st March 24. Option 1, under this option, Lark Limited would sell the whole of the ordinary share capital of STV Limited to an unconnected company for 920,000. Option 2, under this option, STV Limited would sell its assets and would cease trading. It would pay a dividend to Lark Limited equal to the post-tax proceeds realized. The following transactions would occur. The strict building would be sold to VAR Limited for its market value of 700,000. VAR Limited would use the building for its trading purposes. Okay. The S trademark would be sold to an unconnected company for 50,000. Other assets, which is like equipment and inventory, would be sold to various unconnected companies for market value. This would result in additional taxable profits of 20,000. Receivables would be collected and trademark and other payables would be paid. In total, the sales realization of these assets would result in a net cash surplus of 130,000. Sorry. Good one at Salam. That's very nice. VAT, I agree to provide I agree to provide advice to Resati on applying for VAT group registration and the VAT implications for the sale of district building if option 2 is chosen. Reducing the corporation tax payable by group company. Rosati asked for my advice on two possible strategies to reduce the corporation tax payable by the Lark Limited Group company. These strategies are summarized in an email which is attached to this memorandum Exhibit 2. Rosati personal tax matters. I also attach a further email from Rosati setting out some matters he wishes to discuss in relation to his personal tax affairs. No, I'm not making notes. Otherwise, I basically reading the question, then at times thinking, cross-checking, cross-linking, and then moving forward or moving ahead. Nothing else. By the way, do you guys feel any kind of ethical issue till yet? Just asking. Because very honestly, while reading the question till here, I really feel a ethical issue. Yeah. So probably the ethical, again, that's my opinion. I will look for the question. But planning the question, like in audit, we normally use the word know your customer. So in the same way, if I try to know my question, then to be precise, probably the ethical issue which I am feeling over here is giving advice to Rosati and to the company together. This looks to me the ethical issue over here. Yeah. So again, Mahmood, that's the gut feeling, that's the opinion. It can be totally off from this assumption. I agree. Now, looking for the tax reduction strategy, which is probably the email basically. Tax reduction strategy. Tax manager Rosati, 1st Feb. I have been looking for ways to reduce the corporation tax payable by the group. I set out below two strategies which have came to my attention, and I would be interested to hear your views. I would emphasize that, as you would expect, the group would never do anything illegal or attempt to conceal the actions of the company in any way. Okay. You know, I like for me, very honestly, that sounds bit weird. Pricing strategy. Lark Limited buys some of the components it uses from URB company. The price currently charged by URB company to Lark is the same as which it would be charged by an independent third-party supplier. If Lark Limited were to pay a higher price for these components, its profits and therefore its corporation tax liability would be reduced. The profits of URB company would increase, but as you know, the rate of corporation tax in the country of Limiro is lower than the main rate in UK, such that the corporation tax payable by the group would be reduced. Arsalan, that's a very good point you picked, and it's highly appreciated. Yes, to be precise, that more offer looks like to be the transfer pricing kind of issue. Strategies suggested by the business advisor. A business advisor has suggested a strategy to reduce the group corporation tax payable. It would involve Lark Limited make payments to VAR Limited, which would result in tax deduction for Lark Limited, but would not give rise to taxable income in VAR Limited. We would need to incorporate two new subsidiary companies which would enter into number of interrelated contracts with Lark Limited. There would then be a series of payments and repayments by the companies involved. Rosati. Perfect. Then gift of shares in Shark Limited. Sorry, Lark Limited. As you know, I purchased 70,000 shares in Lark Limited, a 70% holding in June 14 for 1.5 per share. And I have made gifts from this shareholding in the past. On 1st May 24, further such gifts, 1,500 shares to a discretionary trust established for the benefit of my sister's children and 1,500 shares to my brother. These will be my only gifts in the tax year 24-25. My brother has been living in the country of Limiro since 2015. Unfortunately, he is in poor health such that he has not visited the UK since 2007 and will not be able to do so in the future. Fine. We have made this gift in the past. I have claimed the gift holdover relief. I would like to do this again in respect of the gifts to be made on 1st May 2024. I recall that when I last made a gift of shares in Lark Limited, the relief was restricted to 94% of the gain arising due to underdeveloped land owned by the company. When advising me on these gifts, please assume that this percentage has not changed. Rosati. Exhibits done. Now, what I am supposed to do Extracts from email from manager dated 1st Feb 24. Please carry out the following. Write a memorandum to LARC Limited Group Client 5. Again, importantly, LARC Limited Group Client 5 means your memorandum would be for Client 5. Okay. To assist us in preparing for meeting with Rosati, when carrying out this work, you should note that the LARC Limited Group claims all possible tax reductions and deferrals in respect of both tangible and intangible assets as soon as possible. The memorandum should cover the following. Sale of STV Limited, Exhibit 1. You should ignore VAT when carrying out this task. Tax implication of sale in respect of option 1. Explain the corporation tax implication if of a sale of the shares in respect of option 2. Explain the corporation tax implications of for STV Limited and stamp duty land tax implications for the sale of strict building. Calculate the taxable trading profits from the sale of S trade. In order to assist Rosati in deciding on which option to proceed with, prepare calculations to show which option would generate the greater amount of post-tax proceeds for LARC Limited. In respect of both options, set out any other tax and or commercial method directly related to this proposed sale, which we should draw to Rosati attention. VAT Exhibit 1. So what is the point of discussion with respect to VAT? You should note that Rosati intends to include all eligible companies in the group VAT registration and that UK resident companies in the group make standard rated supplies only. However, Rosati will need to resolve certain administrative issues before the application explain which of the companies in the LARC Limited would be included within the group registration. On the assumption that sale of STV Limited is carried out in accordance with option 2, explain, the word is explain, why the sale of business assets would not qualify as transfer of going concern and consequently whether or not STV would require to charge VAT on the sale of strict building to WAR Limited. 3. Reducing the corporation tax payable by the group companies, which is like Exhibit 2. Pricing strategy. Explain the corporation tax implications for the LARC Limited group of adopting the pricing strategy by Rosati. Strategies suggested by business advisor. I have reviewed this strategy and concluded that it would fall within the general anti-abusive rule. I hope you guys recall what was general anti-abusive rule. And if you recall, I was like, this is something which is very normal for to be examined, like car, stuff like that, ethical issues. Um, Distinguish between tax evasion and anti-avoidance and state the purpose of the GAR. So very honestly, distinguish between tax evasion and avoidance. Considering ATX exam, this is like very sweet and simple marks, very honestly. Explain why GAR would apply to the strategy proposed by Rosati Business Advice. Rosati gift of ordinary shares in Lark Limited. Write a memorandum to Rosati Client 5. When carrying out this work, you should assume that on 1st May 24, the market value of 1500 shares would be 27,000. Rosati is a high rate taxpayer and business asset disposal relief will be available in respect of this gift. For each of the two proposed gifts, explain whether or not gift holder relief will be available. And the recipient CGT base cost in the shares received. By the way, guys, if you notice, memorandum is for corporate matters. It is not for part B. So this method, and if I look into part B, there is a separate memorandum for the Rosati client file. Generally, on your point, Arsalan, generally we do write the recommendations type of thing in the end of the memorandum, but only if it is required. So if not required, then there is no need to write any such thing with respect to um, I read your comment. Uh, Let me look into the final requirement thing. Then we'll continue. You should assume that today's date is 1st Feb 24. Respond to the instructions in the email from your manager. Okay. split is available 10 months. Sorry, the work from home limitation. I hope you guys understand it. uh, I'm going to open up my Word document so that we can continue. By the way, a question. In your opinion, what is more part of the requirement? Is it the calculation or is it the theoretical element? Basically, the calculation element, sorry, theoretical element, which is more. And since uh, there is more calculation element, sorry, theoretical element, that's why my main answer would be in the Word document and I'll keep my working in the spreadsheet. Okay. Okay. So now, once again, a lot of things covered, a very wide range of questions to be precise. This is part A of the requirement where I am making memorandum. Part A. Heading 1, bold underline. To the client file large limited group subject. Allow me to write the subject corporate matters. Then next is prepared by text senior assistant manager, whatever you want to name yourself. Write a memorandum to assist us. Okay. You know, in the first line, I'm going to set up the tone of this memorandum. What should be tone of this memorandum? The tone of this memorandum should be, just a second, let me write it for you. This memorandum has been prepared to assist our preparation for a meeting with Rosati, the managing director of LAR Limited. This is the tone which I set, the context I set for the memorandum. Now, what memorandum should cover? The first sale of STV Limited. This is my main heading, level one heading. This is memorandum is main heading, level one heading is this, and tax sale of STV Limited first. Then you should ignore that when carrying out this task, tax implication of the sale. Tax implication of sale. And within the tax implication of sale, I am discussing about option one, where LARC Limited sale sells the shares in STV Limited. Now, explain the corporation tax implication. The gain realized by LARC Limited on the sale of shares would be exempt from corporation tax due to substantial shareholding exemption. The SSC would be available because STV Limited is a trading company and LARC Limited would have owned the would have owned at least 10% of the ordinary share capital for more than 12 months in the last 6 years prior to the date of sale. Tax implication. Then after this, in respect of option 2, option 2, SPV Limited sell its assets. Explain the corporation tax implications for STV Limited and stamp duty land tax implications for the sale of strict building. Calculate the taxable profits arising from the sale of S trademark. Yes, any starting points or starting thoughts for this? Any starting points or starting thoughts for this particular part of the question? No SDLT on this? Good. Why no SDLT? Just asking. I'm not saying you are wrong. I'm just asking. Why? Very good point. That's a group transfer. Which group transfer? Capital gains group transfer. It's because of the capital gains group, right? Um, so with respect to sale of a strict building, I'm supposed to consider 2 points. One is the corporation tax implication and one is SDLT implication, right? So in this, I'm first talking about sale of strict building. Corporation tax implications. STV Limited and VAR Limited are members of the LAC Limited capital gains group because LAC Limited owns at least 75% of the ordinary share capital of both the companies. Accordingly, the sale of the building to VAR Limited will take place at no gain, no loss, automatically, irrespective of actual consideration. There will be no corporation tax implications on this sale. Sale of a strict building, and here we are going to talk about stamp duty and tax implication. Let me look into your comment. I have a question as they are selling STV assets. So yes, the disposal would be at market value, but the first priority or the top element is the capital gains growth. So since they are part of the capital gains growth, hence whatever is the actual consideration, that's irrelevant. Sale of a strict building, same thing goes over here as well. SDLT would not be applicable as SPV Limited and VR Limited are part of the capital gains group. That it would fall under stamp taxes exemption. Then calculate the taxable profits arising from the sale of trademark. The word is calculate. refer to the spreadsheet working one. As per working in as per working one in spreadsheet taxable profits from the sale of S trademark would be figure out some data. Option 2. Under this option, STV sell its assets and just cease trading. It would then pay a dividend to Lark Limited. The following Strict Limited will be sold to VAR. VAR would use the building for trading purpose. S trademark would be sold to an unconnected company for 50,000. Other assets, equipment inventory sold to various unconnected. Receivables would be collected and trade and other payables would be paid. In total, the sale realization of these other assets would result in net cash surplus of 130,000. Okay. On 1st April, STV purchased a registered trademark for 30,000. You should aware that on 1st May, VAR Limited purchased a registered trademark for 40,000. Fine. Salan, there is, so apparently you are right, but there is one more play in this. Disposal proceeds, 50,000. Cost, 30,000. Less. Arsalan, I can see a typo error in your comment. It should be 27. Not 27, but 23. So 30 minus 3 is 27 and 50 minus 27 is 23, right? Amortization, negative 3,000. By the way, do listen to this thing carefully. This transaction will going to be take place on 31st March 24, right? And if I look over here, on 1st April 22, STV Limited purchased a registered trademark World Limited purchase a registered trademark V for 40,000. Sorry, not this one. So, I am like intangible rollover relief purchased another trademark for 40,000, disposed of this for 50,000. So uninvested amount is my gain and uninvested amount is 50,000 minus 40,000. As a result, intangible rollover relief would be my balancing figure. The brand Mahmood Rahman, let me look. So this is against V brand. So S is the disposal which we are disposing right now. But this is against the V brand. Exactly. Uninvested amount is taxed immediately. Rest is the rollover relief. And it is group rollover relief. Like I'm taking a pause for a minute for you guys to look, for you guys to respond. What is the question in amortization? Why I have considered the amortization? Is it to be precise the question? So for intangible asset, if for intangible asset, it's basically not the, for intangible assets to be precise, it's not the cost which is deducted from the disposal proceeds. It's basically the net book value which is deducted from the disposal proceeds. Maruf, that's a very good point. Uh, I would be explaining or discussing this rollover relief thing uh, in my theoretical section, like in my document. Taxable trading profits from the sale of S trademark would be 10,000. It is due to intangible assets, rollover relief available on the disposal of S trademark and reinvestment by and reinvestment in due to partial reinvestment due to partial the chargeable gain is restricted to the answer is yes. Why? So you just show your comment. The answer is yes. So I can write it over here due to partial reinvestment in qualifying period. Is this part clear? Tax implication of sell. Okay. So this is all part A1, one of part A1, right? Now I'm going to start part A2, sorry, part 2 of A1. Two. Tax implications of sell. Two. Assisting Rosati and deciding on which option to proceed with. Prepare calculations to show which option would generate the greater amount of post-tax proceeds. The word is prepared calculation. In respect of both options, set out any other tax and or commercial matters directly related to this proposed sale, which we should draw to Rosati attention. Yes, Mahmood, sorry, I missed. Yes, Mahmood Rahman, what's your question, please? This is unused amount of 10,000, which is chargeable. So that's chargeable gain, but you know the concept of intangible fixed asset as part of corporation tax. Since they are using it as part of their trade, hence it would be part of their trading profit. And if not, I have mentioned like taxable trading profit. So it's not chargeable gain to be precise. Like whatever we name it, that's fine. But what to do with this? That's not gain. That's to be reported in trading income. Okay, so going to start part B. One is Lark Limited post-tax proceed. Working two, option one, what is the post-tax? Lark Limited will do 550. I'm just making a pro forma for you guys if you need to put proceeds from strict building, proceeds from S trademark, proceeds from yes, strict building. The proceeds is 50,000, 130,000. Tax on sale of other assets. Taxable profits of 20,000. Tax on sale of S trademark. Tax on sale of strict building. Sale of shares would result in whereas as per working in a spreadsheet, sale of traded assets would result in post-tax proceeds of 872,000. Hence, option 1. Hmm, Next, in respect of both options, set out any other tax and or commercial matter. Sale of shares. Yes, option 1, sale of shares. What are the other methods to consider? The strict building will be owned by accordingly VAR Limited. Would not be able to acquire the building would have to find a suitable this turns to be more or less so probably here I'm trying to say is if you sell out the share, the building will also go away. And if it's something which is to be used in your trade, then you need to buy another one, which would cost you still 700,000. Sure. So what what's the issue if you sell out the shares? So if you be called a part of tax planning, we were like, if you make a disposal of share, all of the assets are gone. So it's good thing if your own group has an eye on any of the asset, then that's an issue. It's like your asset is also gone away. So if you need that particular asset, then you need to buy another one. So that's the issue. Yeah, very well. It's 700 plus stamp taxes. Why? I am like, that building is something which you are uh, using in your trade. If you are using in your trade, and if you are going to sell out trade and assets, you want to sell out this building to within the group. So it means you still need that building, right? So if you still need that building, and if you sell out all of the trade and assets, you make a disposal of all of the assets, like all of the shares, then this building will also go away. Then probably you need to have another building. Means there will be a cash outflow. Any further question? No? Perfect. So let's move on to the option two. Any other tax matters we are discussing, right? Any other matter? Uh, Tax or commercial matter. So this is a commercial matter, not a tax matter. Now for sale of trade and asset. It generates a lower amount of post-tax proceeds. In addition, the majority of the proceeds would not be the new money in relation to the group, as the building was sold to VAR Limited. VAR Limited base cost in the strict building would be equal to SPV limited space cost of 430,000 as opposed to current market value of 700,000. Accordingly, the future gain on sale of strict building would be higher. The intangible rollover would reduce the base cost of the intangible rollover would reduce the base cost of wheat trademark and the amortization I'm done with this. Is it like clear? Yes, Awais, you want to ask anything? Go ahead, please.
Sir, you have written the new money in relation to the group. The majority of the proceed would be, this means, what it means?
This means what means? So it simply means, for example, from a group perspective, if one company is selling out to another, just imagine from a group cash flow perspective, is there anything coming into the group? The answer is no. Nothing is going out, I agree, but nothing is coming into the group. But does it really matter? The answer is yes, because just imagine, from a group cash flow perspective, if you are selling out to outsider, you will be presenting some cash inflow into the group from the disposal of asset, from anyhow, which is a good sign from a group cash flow perspective.
Okay, sir. So sir, in the second, you have written the cost of the building, which means if we are selling trade and assets and that building to the VAR limited, that will be treated as no gain, no loss. Is this the point?
True. So it would be at no gain, no loss, right? So if no gain, no loss, so
Yes,
cost
sir.
would remain the same. Like
Okay, sir.
for acquirer, cost would remain the same. If cost would remain the same, and imagine if VAR Limited dispose of the building in future, he would have more
Yes, sir.
amount
So
of gain.
gains would be, yeah. Okay, sir. Okay. Thank you.
Most welcome. Should I start the wet part, like part two? Any questions from this? You should note that Rosati intends to calculate all, Rosati intends to include all eligible companies in the group VAT registration, and that the UK tax resident companies in the group make standard rated supplies only. However, Rosati will need to resolve certain administrative issues before the application can be finalized, such that the group registration will not be placed until 1st May 24. Explain which of the companies in the Lark Limited group can be included within a VAT group registration with Lark Limited. On the assumption that sale of STV Limited is carried out in accordance with option 2, explain why the sale of business asset would not qualify as transfer of going concern, and consequently whether or not STV Limited would be required to charge VAT, whether or not. So requirement, like first bullet of VAT has a very sweet and simple one requirement, which is I just need to list down which companies should be included in VAT group and which companies should not be included in that VAT group. UK resident company, Arsalan, yes, and there should be a control element as well. So from a conditions perspective, I will write both the conditions, and then I will conclude which companies can be included and which companies cannot be included. On the second point, sale of a strict building under option 2, few pointers are, first, I need to discuss whether transfer of going concern apply or not. And second, whether or not required to charge VAT on the sale of strict building to VAR. Two things to consider. Group registration. The companies which can be included in a group VAT registration with large limited are which are controlled by Lark Limited and established in UK, either resident in UK or having a permanent establishment in UK. Accordingly, TEN Limited and WAR Limited, accordingly TEN Limited, and WAR Limited could be included in group VAT registration, because STV Limited, we would have sold it till 1st May 2024. That's why I'm not talking about STV Limited, okay? STV Limited sale of its business asset would not qualify for transfer of going concern for the purpose of VAT, because no one acquirer will be acquiring the overall operations of STV Limited. Disposal of individual assets, including street building. as VAR Limited and STV Limited were not in VAT group registration when the sale of building takes place, we need to know whether the option to tax has been opted or not in respect of the building. If option to tax has been opted, STV Limited will be required to charge VAT at the rate 20% on the sale of building. If option to tax has not been opted, the sale would be an exempt supply. I'm just looking to your comments. Only URB should not be included now. No. Arshan, so URB, I agree, URB should not be there. For the second, which is like STV. Exactly. So STV disposal, we are planning on 31st March 24, right? So STV disposal, we are planning on 31st March 24, whether sale of shares or sale of trade and assets, it would be on 31st March 24. And if I look here, so it's 1st May 24. That's why I've not included the STV Limited. Mahmood Rahman, that's what I agree. It's not clearly mentioned that they have opted to tax or not. That's why I am articulating my answer in both the ways. Like if it exists, then this. If not exists, then this. Yeah, exactly. And you know, this is then your commercial acumen or skepticism type of things that you are not putting any assumption at your own and drafting the answer. No, so that's basically the expectation of the examiner I am doing because examiner expectation is to meet with the acumen as well. Yeah, exactly. So that's important for the professional mark. So Maru, on your point, what will be the implications if transfer of going concern rules apply? So if transfer of going concern rules apply, then this would become an that would be out of the scope of VAT. Because VAT on transfer of going concern, VAT does not apply. Nothing further. Can I move to the next question? Reducing the corporation tax payable by the group companies. Pricing strategy. I need to capture this into two dimensions. One is pricing strategy. Underline. Pricing strategy. Explain the corporation of adopting the pricing strategy suggested by Rosati. Lark Limited and URB company are connected companies for the purposes of transfer pricing rules. This is because control URB company. Accordingly, the transfer pricing rules would apply to the purchaser of components from URB company. So first I established whether the transfer pricing rules would apply or not. Now I need to discuss, demonstrate what are the rules and what are the exact regulations. Under the transfer pricing rules, Lark Limited would obtain a tax advantage if it were to pay more for components purchased from URP company, then the price paid consequently, it would be required to calculate its profits for UK corporation tax purposes using the arm's length price rather than price paid for. Last, since no double tax treaty exists between UK and Lemoro, there would be no exemption from transfer pricing rule. So I'm done with the first. Let me put the heading for a second, then we'll look for your comment. Strategy Sir, I read somewhere in the district that transfer price only applicable to large companies. Is it true? So there is an exemption for small and medium enterprise. Maru, that's a good question. So previously I not ever requested to copy and paste and share question with everyone, but for this question I request you to please share it with everyone. So yes, you are right. But here we are not talking about such exemption because there is no double tax treaty. Yes, distinguish between tax avoidance and tax evasion. tax evasion is unlawful. It involves the provision of false information or withholding of in order to evade tax. Tax avoidance involves the use of legal methods in order to reduce the amount of tax payable. I distinguished, explain why the GAR would apply. Explain why the GAR would apply. So first, before why the GAR would apply, purpose of GAR. The GAR is intended to counteract tax advantages obtained via what would otherwise be legal tax avoidance. Where the arrangements can be considered as tax abusive. So I explained the starting three bullets: tax evasion, tax avoidance, purpose of GAR. I'm done. Now the next one is why the GAR would apply. Because a tax advantage would be obtained where payment results in a tax deduction for lot limited, but did not give rise to taxable income in war limit. the formation of two subsidies together with interrelated contracts and the series of payments and repayments, which are intended to obtain the tax advantage will be referred as tax arrangement. These arrangements appear to have been designed to give rise additional tax deductions and or non-taxable income rather than genuine commercial reason, such that they are likely to be regarded as abusive. Arsalan, I just noticed your comment. DAR is used to prevent an aggressive tax plan. So it's not about aggressive or non-aggressive. It's more about abusive or non-abusive. More about. Any further question? If a person source to reduce. No, so one is text planning and one is taking artificial steps. So for example, if I make a transfer of asset to spouse, let's say, if I transfer some of the shares to my wife, so that let's say she's a basic rate taxpayer, I am high rate, additional rate taxpayer. Just to save the tax, it's not abusive. But imagine I'm making a paper marriage to transfer the money, so to gain the tax benefit. Probably, yes, now it is something which would become abusive. Why? I can tell you in simple. So we discussed this at time of ethics session, which we discussed, and it is to be precise. General anti-abusive rule means you are making artificial steps, creating a series of transactions to hide the genuineness, substance of the transaction. And the main objective of this is to save the tax. Again, it's not illegal, but creating false situation to take the benefit of the avoidance schemes, avoidance options is basically referred as GAR. So like I'm giving an example, let's suppose I'm making a paper marriage, a fake marriage, just to take benefit or advantage of reliefs available to a spouse. That is one of the example of the GAR. But if the marriage is genuine and you are taking benefits of the tax rules or relaxations which are available to spouses, then there is no issue. Then it's not GAR, it's simple tax planning. So there is a very thin line between GAR and this tax planning thing, avoidance. Write a memorandum for Rosati client file. Write a memorandum for Rosati client file. Subject. write a memorandum while carrying out, we should assume that. So last emitter group discussion done. Tax reduction strategy done. Yeah, sure. Arsalan, please, you can unmute your mic. Feel free to do that.
Assalamu alaikum, sir. I'm audible.
So, Masam, yes, loud and clear.
Sir, I just wanted to know, I'm doing the questions, some past questions, and I just want to use completely Word. Like I'm just making the box and do all my calculation there. So if I am unable to use the Excel in the exam, so it is fine or not?
That's perfectly fine. But very honestly, think from a timing perspective, what is more time efficient to in today's question, if you notice, as per working one in a spreadsheet, making such type of reference is easy, or making calculations over here is easy. So what's more time efficient?
Sir, basically more simple is to just write on the Excel, but unfortunately to open multiple screens at a time is very hectic at some time. So that's why I'm saying just make the box and start calculation on the Word.
So I agree with you, and very honestly, and very openly, started when I was studying myself, there was no computer concept, right? So that was the purely hard copy element. Then initially, I also learned how to manage these type of screens. And very honestly, still you can't see two more screens open in my laptop at the moment. One is your chat box and one is number of participants. So number of participants, something which I notice I close, but chat box continuously open. So this is something which you will learn with the passage of time, very honest. The more questions you do, so your main focus should be to make your workings time efficient as well. But if still you are comfortable, so from examiner perspective, it's still not allowed to do so.
Sir, means if in the exam there is calculation for up to 10 to 15 marks, so I can use the Word only if I need.
So for long workings, I do not advise because there will be very too much duplication of work. Too much duplication as if first you will be calculating it somewhat, let's say, on any paper type of a space. Once you are done with the paper type of a space, then you will be making a table, and while making the table, you will be explaining your workings as well, as in the x multiplied by y divided by z, right? But in the spreadsheet, if the formula is there, then you automatically have your answer. So again, my perspective is from the timings and the efficiency perspective. A spreadsheet is advisable, but probably you are asking me from a rule perspective, am I allowed to do so? So yes, you are allowed to do so.
Okay, sir.
So
Thank you so
probably
much.
there are two separate things we are talking about. Your question is continuously toward legally or from a ACCA rule perspective. Yes, can do that. But my answer, like that's one side rule. My response is forget about the rule. What's more comfortable and convenient for you? So from convenient, comfortable perspective using the spreadsheet. Perfect. So should I start the part B of the requirement? Okay. I need to recall what was the question. On 1st May, the market value 15 will be 27,700. Rosati's high rate taxpayer business asset will be available in respect of these gifts. For each, whether or not gift holdover relief is available, calculate recipient CGT base cost. As you know, I have purchased 70,000 shares, which is 70% holding. 70,000 shares, 70% holding means the issued share capital of Lark Limited would be 100,000 shares in June 14 for 1.5 per share. And I have made gifts from this shareholding in the past. On 1st May 24, I will make two further such gifts, 1,500 shares to a discretionary trust established for the benefits of my sister's children and 1,500 shares to my brother. These will be my only gifts in the tax year 24-25. My brother has been living in the country of Limiro since 2015. Unfortunately, he is in poor health such that he has not visited the UK since 17 and will not be able to do so in future. When I have made gifts in the past, I have claimed gift holdover relief. I would like to do this again in respect of the gifts to be made on 1st May 24. I recall that when I made a gift of shares in Lark Limited, the relief was restricted to 94% of the gain due to underdeveloped land owned by the company. When advising me on these gifts, please assume that this percentage has not been changed. Okay. On 1st May 24, the market value will be 27,000, high rate taxpayer and business asset will be available. Because I can very clearly see Rosati was the finance director. Rosati owns the shares for more than 2 years and holds 70%, which is like more than 5%. So she do qualify for the BADR. For each of the two proposed gifts, so one is gift to discretionary trust and second one to brother. Explain whether or not gift holdover relief will be available. Calculate Rosati CGT liability and the recipient CGT base cost in the shares received. Each of the two gifts will result in a chargeable gain of 24,750. It is. So while having word with you, I calculated it. So each will result in a chargeable gain of 24,750. Right. So this is the gain amount. Now, two things to consider. One was gift to gift to discretionary trust. The gift holdover relief available in respect of the whole of the gain as opposed to 94% of gains. This is because a gift to trust in life is immediately chargeable to IHT. The trustees' base cost in the shares would be being the cost to Rosati for 1,500 shares. I'm just going to look for your comments. Arsalan, so for gift holdover, in case of share, we have the concept of chargeable business asset divided by chargeable asset. So probably underdeveloped land is not a business asset. That's why they are talking about restricting. That's why they are restricting it. But considering this fact, since over here, uh, we are talking about CLT, that's why no such implications. Yeah, exactly. I agree. So cost 27,700 minus 24,750, which is and like effectively the cost. Remember, for relevant property trust, the asset is transferred at cost effectively. Yes, gift to discretionary trust, I discussed. Gift to Rosati brother. The base cost Gift to Rosati brother. Gift holdover relief would be available, not available. Yes, gift holdover relief would be available, would not be available. Yes, gift holdover relief will be available, will not be available. Why no? Why no? Correct. Not available because not resident in UK. For gift holdover relief, it is only available when the person is UK resident. Correct. Gift holdover relief would not be, yes, why would not be available in respect of this gift because the brother is not UK resident in tax year 24-25. Accordingly, the chargeable gain would be the base cost of shares for Rosati's brother would be working for gains were by the amount 24750. So since in the question, it is very clearly mentioned that she will qualify for BADR. That's why I'm not discussing why BADR conditions are met or why not met. .94% is not relevant. The answer is no. because referring to the concept of trust and taxes, in the trust and taxes for relevant property trust, we are like never ever two taxes. There will be two taxes which will be taxed at once. So if one tax is applicable, other tax becomes not applicable or becomes silent type of thing. So that's why, since for relevant
Okay, sir.
property. Mhm.
Sir, if these conditions of relevant property trust is not there and a gift holdover relief is due to the business
Then
asset,
94% is relevant.
then the 94%
Is relevant. Then gift holdover relief would be restricted to 94.
So, sir, we can also write in the question that this is not relevant for because of IHT.
Is what in detail mentioned. Look. It would be in respect of whole gain as opposed to 94% because gift to trust in life is immediately chargeable to IHT. Even
Okay,
for
sir.
relevant property trust, for gift holdover relief, the fundamental condition is the asset should be business asset, right? Right, for gift holdover, this is one of the fundamental conditions. If the asset is taxed under IHT or relevant property trust, then there is no need of business asset as well. So in such situation, gift holdover relief is always available, irrespective of the business asset. So whether business asset, yes, no, it would always be available. That music was good, I think. So I'm done. If there is any question from your side or anyone,
Sir, I have a question.
yes, please go ahead.
Yes, sir. मैंने ना एथिक्स की क्लास नहीं ली थी तो मुझे ना वो कार मतलब जो भी आपने टॉपिक पढ़ाया था मैंने एक सवाल किया था उससे रिलेटेड दैट वाज मतलब मिलता जुलता ही था बिल्कुल इसके और ऐसे ही लैंग्वेज लिखी हुई थी जैसे आपने लिखवाई थी ठीक है टोटली बट वो भी समझ नहीं आया था और ये भी सवाल समझ नहीं आया तो जो आपने की क्लास है तो वो लेने के बाद टोटली क्लियर हो जाएगा या उसके अलावा कुछ है
What I
टॉपिक
can
के
what I can tell you on this point, whether you
जी
take the class or not, since you have read it, covered it in 2 questions, probably not 100%. To some extent, you would have an idea what my perspective is. Do read it from the notes, text planning ethics notes. Hopefully, it will be
ओके
covered.
सर ओके सर
If not, do let me. For sure, we'll connect.
Sir, the ethics notes are in the
Dropbox in the in the Dropbox link is available
Yes.
in description.
okay, sir. Okay.
And so, anything further? Sorry.
All done from our side. Sir. Thank you.
Anything further? One comment I can see. Yes, we are done. So anything further? So how was the question? What's your feedback on the question? Sundus Mahmood, I can see you just joined the class. We are about to end. You're a bit late to join the class.
Sir, as far as 50 marks question is concerned, its testing is very much different different areas. As in this question, we have done CGT,
related some part with IIT trust and all that areas. So that was not in TX. That's the change here in ATX.
Agreed. So again, in 50 marks, there is a lot of things to cover from the examiner perspective. If you look how many areas examined covered over here. So yes, still looking for your feedback.
Sir, can you please share your email for the answer sharing?
So writing in the chat. Excellent.
Sir, can you please share this answer with us?
My dear friend, all things are in the Dropbox. We'll upload this one as well. No worries. So I
Okay,
uploaded previous solutions as well, the PDF of Word and the spreadsheet. While having Word with you, I exported that into the PDF. We'll share that with you guys as well. So probably
Sir,
after,
sir, tomorrow is our last class.
yes. So again, like tomorrow, my plan is to do the part B section B questions. But if you still want, we want any further class for A, B, C, X, Y, Z reason, we can plan, we can, that's not something which is not doable.
Sir, I basically
nothing-
concerned with the pre-mock, like when we done the pre-mock in the proper exam condition, then simply share the answers with you and for the marking purpose.
So sure, would do. I'll mark it and share it with you guys. Along with my recommendations also.
Yes, sir. Thank you so much.
No problem. Deadlines for yeah, sure. So you can share it on Tuesday or Wednesday. But obviously give me a day time to turn around, obviously. Yeah, Sanjay, we can connect. Just give me a minute. We can connect. Perfect, guys. Thank you very much for being with me. I hope it was fruitful session. tomorrow would also be fruitful, inshallah. So see you guys tomorrow, inshallah. Okay. Okay. Yes, Avaish, please go ahead. Okay, guys. Thank you very much. See you tomorrow, inshallah. Sanjay, we can connect. Let's connect after this. Okay.